Good morning, traders. This is Brad Matheny. Today is February 25th. I am coming to you today with the TTScanner Hotlists and some new information regarding the general market trends. The MENT Rotational Modeling System moved into bearish trending on the close of trading on Friday. This is a screen capture I made today, this morning. You can see the sell signal right here on the daily chart. This is a confirmed downward trend on the daily chart. This means we are still bullish on the weekly chart, longer term, bearish on the daily chart, indicating we are likely to see some downward pricing pressure take place over the next couple of weeks, maybe couple of months, don't know yet. This holding up bullish is indicating that we're still in a moderate upward trend longer term. We need to be aware of the extended volatility that could take place, and it's either going to end up being a wave B pullback of this wave one to the upside, or it could end up being a broader A, B, C downside move, which could catch a lot of people by surprise. So let's play this out effectively as we move forward. Today we're going to be going over the TTScanner Hotlist. I want to remind everybody to please come to MENT.com, check out what I do. Subscribe to the Expert Growth membership page. You get quite a bit of information. All of my research, all of my custom indicators, all of my custom indexes and proprietary algos, as well as access to the MENT Rotational Modeling System and my new day trading, swing trading tools, all for one incredibly low price. I'm trying to help you, and I'm trying to ask you to support the research that I provide if I help you, and if you find my research valuable. The goal is to continue to develop and deliver more incredible tools for you. In fact, I have something that I'm going to be releasing this weekend for day traders on TradingView, and I have also created a brand new biasing mechanism for the SPY, which will help with my SPY cycle patterns. So let's get into the TTScanner hot list. So here is the value hot list. A little too big. All right, so we have no new triggers. The last new trigger we had was OMC, Omicron Group, Omicron, Omnicom. This was 2 weeks ago. We're up 0.07%. We have not hit any triggers. All the other triggers have been many weeks old. You can see we've gone back to neutral trending on the value list. We were getting a lot of bullish signals a couple weeks back. We've rolled into warning distribution, warning, bearish. We've gone into this kind of neutral trending. We're not getting any new signals. That happens when the markets flatten out. We're not, this modeling system, the TTScanner system, will not be taking aggressive trades when the markets move into flattening trends. We are also getting a lot of negative bull-bear trends here. You can see very few bullish. When we get into more defined trending on a weekly basis, we will start to get better signals. But in the meantime, this not having triggers over the last 2 or 3 weeks is actually very good. That's the way what we wanted to do. Stay out of and away from risks in the market. So the idea that we do not have any new triggers on the weekly list for the end of this week is very good. Next, we have the TTScanner main hot list. We only have one trigger left on this, ladies and gentlemen, XLE. The Energy Spider Trust, 58 weeks long, 37% profit. Everything else is neutral, flat. If oil collapses, we could see this get out of a trade. We're at 84.66. Our stop is at 77.70. We could see this move into a flat trade any week. You see that we're in warning trending. We're in -4 trending and -42.58 on the thrusting pattern. We could move completely into a flat position here, waiting for new triggers, and that would be fully acceptable. Okay, the core list, we have no new triggers. A couple of triggers here, short. So this is indicating that we, this is actually the core inverse, sorry. So this is telling us we're getting a long in high beta bear stocks. So this means that this is moving higher, market's moving down. The inverted bear 3x ETF is short. You can see here that we actually this would be a long setup off the markets. So we're minus 1.81%, minus 40% on this trade. This is Yang, very volatile in Yang. It's trading very low at 11. We got in at 8.32, 10% here, 24% here, and 16% here in FAZ, SOXS, and EPV. So understand that we're getting a number of short triggers on this inverse list. These are carried over from the last little bullish trend, 2 or 3 weeks old. The volatility is going to kick in. We have no targets yet. And remember, you should be trading very small amounts. So if you were to be trading this and look at this minus 40%, Yang is almost like natural gas in the sense that it can be really good when you catch the right trend, but it can be really dangerous if it's on the wrong side. So it's almost like the Widowmaker, like natural gas. You would want to be trading very small allocation levels against this. Otherwise, you're going to be, pretty much kind of like gambling on yin and yang with regards to the volatility that takes place there. Okay, next is the core list. No new triggers. Again, we're very mixed. The markets are flattening out, trying to consolidate. We might not see any big trends until June and July. And this is very similar to what I've been telling you. We need to stay very cautious the first half of 2023. The markets are going to be volatile, sideways, kind of dangerous if you don't know what you're doing. That's why we've moved our allocation levels effectively to protect against risk and to move back into a cash scenario. All right, guys. Now remember, come over to the website, check out what I do, share with your friends, support me if you can. I really want to help you, and I'm going to be releasing new tools. A big announcement if you're on my list, my mailing list, or if you follow me on Twitter or Facebook or LinkedIn. I am going to be releasing some very important tools for us to move forward and try to get the best scenarios for you as we move forward. All right, guys. Talk to you soon.